Hello traders, I'm Adam Harris from Trade with Precision, and this is your IC market commentary. So there's quite a bit going on in the markets at the moment. I want to do a broad overview of everything and then knuckle down and talk about why I like the specific charts that I do. So first of all, we're looking at euro dollar here, and we can see that it is a little bit weaker against that US dollar. And we look at cable, we look at sterling, we can see we've got a bit of a double bottom here. It's trying to climb a little bit higher. So the pound is a bit stronger against the dollar than the euro is. Overall, my point here is that we don't necessarily have a strong dollar at this time. Okay, just looking at the two major biggest currencies against that. And I'm going to come back to currencies in a moment. Let's have a quick look at gold. So if we have a look at the bigger picture of gold, we can see that we've had a very strong rejection off this. Let's just call it that $2,000 level. We can see the market is currently retracing back into the previous level of resistance. And we're going to see if it finds some support in this area. It's a very good area for it to find support. Could potentially go a little bit further down towards 1841, but I think this is a great area for it to do it in. And this week it's coming down to this level. So I'll be watching to see how the market reacts at this level, and if we produce a series of bullish candles here, we could find that gold indeed starts to work its way back up towards 2000. Then moving on to the global indices. So the big picture here really is, regardless of what we hear in the news, we're overdue for a monthly retracement or weekly retracement. If we look in here, we can see we've had a really good run. We're now in a bull market again. So how do we know that? First of all, we're producing higher lows and higher highs. Another very loose way of putting it is we're above that 20-period moving average, this blue moving average. So as soon as we get above that, we are generally regarded as being in a bull market. Conversely, we can't possibly be in a bear market, an established bear market, and still be above that level. It doesn't really make sense. It can't occur. If we have a look at it from a weekly perspective, we can see that we're currently enjoying a weekly retracement down into the moving averages. We're still in an uptrend on the weekly, and therefore this is a retracement within a bull market rather than a shift from a bull market to a bear market. We've got the 50, 20, and 10 moving averages, and we can see price is likely heading into this area or potentially back down towards this 4332 area. The MACD is nice and bullish, the RSI is nice and bullish, so we are definitely nice and healthy, and this is a natural retracement after a very long sustained move. And so really this week, my expectation is to see it either continue down or potentially start to slow down, with the idea that next week or the week after, we're going to see it start to resume the uptrend. If we compare that to, say, the NASDAQ, which is now obviously mainly tech stocks, you can see we're in the same sort of thing. We've had an extraordinarily long run without a deep retracement, and that's what's happening. If you look at it from a monthly perspective, we're very much overextended. It's not that different from a move such as this. We could find that the retracement is very small, and that price finds support, consolidates for a while before resuming the uptrend. Okay, or we could find at the very least it comes back down towards these previous highs. So what does this mean for investors? It means most investors will just be staying put, waiting for that correction to work itself out, like a wrinkle in a piece of material that's being ironed. And actually what's happening for the most part for traders is they might be considering shorter term moves to the downside, but they are aware that within the bigger bull market picture, price could potentially turn at any direction. So it's higher risk to short the markets when we're in a bull market. Looking at the FTSE, so let's go and look at the UK's FTSE within the bigger picture. You can see we're not that far from all-time highs. We're ping-ponging in this area. It's not really a strong index as indexes go. If we compare it to, for example, the US indices, is not as strong. We can see here price coming back down to these levels to test support. If we look at the DAX, which is the German 30, we can see that this is also doing a bit of a retracement. It's broken through all-time highs. I'd love to see this find some support near the all-time highs here and potentially in this area and then resume to the upside. So it's effectively just taking a bit of a breather. Then let's have a look at the ASX in Australia. We can see again price is still near all-time highs. It's just very choppy at the moment, and effectively consolidating is a better way to put it. So let's then move on to the crypto. So I want to talk very briefly about Bitcoin. So in principle, it would seem we haven't had as much activity on cryptos in the last year. And most of this has to do with the fact that when we get the bigger moves, it's because there's a surplus of cash in the equity markets. So because we've been through a recent contraction, bear market, we're just recovering from that when it comes to stocks, there's a lot of surplus cash at this point. Once the markets start to pick up and become really aggressive, then investors will be looking for diversification, and then they'll probably return back into cryptos. For now, it's my expectation is that it'll stay where it is or potentially climb slowly, but I don't expect massive gains until we resume those big weekly moves to the upside. And so interesting to me would be having a look at, say, Tesla. So Tesla is one of the ones that I'm looking at specifically, and what I'm eyeing out on the weekly time frame is this trend line here. So this trend line here is just a line in the sand which says that as long as price stays above this, principally the stock itself is bullish. It's just enjoying a nice correction. And in fact, the correction that makes the most sense is this 217 level, the old highs, for it to come back down here, potentially connect with that trend line and then resume to the upside here. If it breaches through this line in the sand and starts to fall through this major level of support and resistance, then the bigger picture changes. Then it potentially is now starting to look as though the longer term picture, or at least medium term for the next year or two, is potentially to the downside. Conversely, again, if I compare it to these, right, and just do that, draw a line over there. Conversely, should it find support in this area, start to work its way up and then break through this downward trend line and obviously through that 300 level, then the longer term picture starts to look more bullish. Okay, so this area where it's at right now, a little bit of a triangle type of behavior forming, is worth watching if one is interested in that. Now, let's talk about Nvidia. Nvidia is very much overextended. And because of this overextension, it is very much due for a correction to the downside. And price, potentially this would be a very nice organic place for it to come back to, is around about that 350 level. It's a nice round number. It's the previous high, and the moving averages would be able to come up to meet it. It's had a particularly good run, and again, it's almost parabolic, meaning it's almost straight up, and that usually means there's a bit of a bubble forming, and price would need to come down. So if it's very, very bullish, and if you look at it from a weekly perspective, you can see that we have the 50, 20, and 10 in a bullish formation. We have RSI bullish, MACD bullish, and it's already producing a bullish candle in the buy zone. Usually this would mean that the market is ready to go and resume and continue trending higher. This is an unusual behavior. This is not typical, and I expect for the most part that it is still due for a correction back down towards these levels. And so I'm just exercising some caution with that because there's a little bit of conflict between the monthly picture and the weekly picture. Then moving on to the currency pairs that are of the most interest to me here, and this is the yen crosses. All of the yen pairs, or at least the majority of them with the exception of Aussie yen and Kiwi yen, are looking incredibly bullish. All right, we've got a nice solid uptrend on the daily, the weekly, and the monthly. We're a little bit overextended on the daily. What I would love to see here are any kind of pullbacks into the moving averages and then looking for buy continuation setups. Euro yen is also looking very, very good. It's trying to break through resistance here, but overall it's broken through a major level of resistance here. It's come back to test it, and so that path of least resistance should be to the upside. We look at pound yen here. It's also past these highs. I need a nice little retracement and a continuation of that to the upside. And finally, Swissy yen, you can see starting to top out a little bit here, might be beginning its retracement. And so these are the charts that really catch my interest over the coming week or two, where I'll be looking for those corrections and then resuming those trends to the upside. One more chart that I might have a quick look at will be US crude oil. Overall, it has been largely bullish. The problem is it's had a big move up here, run into resistance, and is doing a bit of a retracement. Whether it's going to stay within the range or ultimately break out really depends on what it does in the near future here. So looking to see if it could find some support in this area and work its way back up to these highs. And if it does that, it's more likely to break out and continue to the upside than anything else. So there we go. That's a lot to digest and chew on, but I do hope you found this instructive and useful, and I look forward to seeing you in future videos. Thank you very much. Have a great week.